Good morning and welcome to NYSE TV Live. I'm Kristen Schiller here in studio at the Stock Exchange. Well, we are set to begin a holiday-shortened trading week, and it comes after what was a volatile stretch on Wall Street last week. Did finish on a positive note on Friday, though, with the Dow jumping by nearly 500 points. Investors digesting the final Fed decision of the year, as well as fresh inflation data from the Fed's preferred inflation gauge. That's the Personal Consumption Expenditures Index. Well, as for this week, investors will still be busy despite a midweek pause, of course, for Christmas. Here's what's on tap this next hour. As stocks look to end the year strong with the S&P 500 up double digits, we've got a potential Santa Claus rally on deck. NYSE senior market strategist Michael Renking will join me in studio on what to expect. Meanwhile, TikTok will remain in the spotlight over the next few weeks as the platform aims to fight off a potential U.S. ban. Attorney Anthony Rappa takes us through what could unfold in January. And global nonprofit organization AmeriCares will ring the opening bell in just about a half-hour time. I'm going to sit down with the Senior Vice President and Chief Development Officer Jenny Goldstein to talk about what AmeriCares has planned in the new year. Well, getting back to our main storyline that we cover here on NYSE TV Live, that is the markets. Joining me now is our resident expert, Michael Renking. He's senior market strategist down here on the floor of the exchange. Michael, great to see you ahead of the holidays.
Hi, good morning.
And a great time for us, too, to continue our conversation. Last week, you had joined us after that Fed decision, and we had seen investors take some time to really parse through the signs, the mixed messages, as you noted, that we got from the Fed. Where do we stand this morning?
Yes, so, I mean, Friday was an important day, right? So, following the Fed meeting, right, they had essentially told us that they had once again reshifted their focus back to the inflation fight, right? So we had gone for 3 years where their sole focus was on inflation. Coming out of the summer, they had shifted that back to the labor market. And then on Wednesday, they said the balance of risk were now once again lean to the upside for inflation. So markets were very much focused on that PCE report that we got on Friday. That came in a little bit better than expected. Now, Chair Powell had hinted that that the data input that he had looked at ahead of that report suggested the numbers would be okay. But markets did kind of breathe a sigh of relief.
Yeah.
Despite that, we had the S&P 500 rally about 1% on Friday. Cutting losses by about a third, but we saw small and mid-cap indices still were down nearly 5% for the week. So a pretty rough week kind of around the globe.
So it sounds like that data point, of course, the Fed's preferred inflation measure, as you discussed on Friday, doesn't necessarily put aside what we heard from the Fed chair on Wednesday. Why is that?
Yeah, so I mean, there's still some concern, right? And interestingly enough, on Friday, Treasuries rallied in response to the report initially, but throughout the day they continued to fade, right? And we had yields ending the day around unchanged. So markets are still watching absolute level of yields, and as you look out to next year, inflation seasonally, right, is going to be working against us here heading into Q1. That's something we typically see, right? And then there's the Washington policy and what that is going to potentially do, kind of to the economic backdrop is still very much in question, right? And most of those policies are inflationary.
Amid all of the headlines that we were digesting collectively last week, what happened prior to that, less than 2 weeks ago, of course, was President-elect Donald Trump's visit to the New York Stock Exchange, along with key members of his cabinet, like his pick for Treasury Secretary and Commerce Secretary as well.
Yeah.
We had heard from the president-elect in the boardroom that day that he's optimistic, but that there are some problems that exists in his mind. How does that set us up for 2025?
Yeah, I mean, look, and there is some optimism, but I think one of the things that we had seen last week that also weighed on markets was the stopgap funding bill, right? And the fact that that got kind of caught up in Congress, right? It once again put a high, kind of shined a light on the fact that we have pretty slim margins in Congress, and it's going to be difficult to move, kind of any of this policy agenda forward. And so we did get that stopgap funding bill passed over the weekend in Congress, right? So there's a little bit of a sigh of relief, kind of around that. though it only kicks the can down the road for 3 months. So we're going to once again have to go through this process again in March.
Interesting. So the visual of the president-elect here at the stock exchange, the last time we had seen a president ring the opening bell was Ronald Reagan decades ago. Does that impact the markets?
Yeah, I mean, it was a very exciting day down here, obviously, in terms of just being on the floor, the energy, right, and just feeling that optimism. Look, I think he's got an aggressive agenda before him. That first 100 days is going to be really interesting. I think we have to kind of see what the sequencing of that looks like. So are we going to lead out with tariffs, or are we going to lead out with potential kind of working on the tax policy? Right, so it's going to be interesting to see how Washington kind of tries to sequence that, and that's going to very much drive, I think, some of the kind of the market activity that we see, right? In terms of if we get the positive policies, kind of if we lead out that way, that'll set us up with some stronger footing once we start to talk about increasing tariffs and things of that nature.
So it seems like the narrative has not changed, of course, since the Fed decision on Wednesday, and of course the press conference from Jerome Powell, despite taking some time maybe to weed through some of the volatility and messages. Yeah,
no, I think that, there's still concern kind of about the environment going forward, but overall, right, when Chair Powell tried to kind of set the stage, telling us that the economic backdrop is still very strong.
Right.
I mean, there were 5, 6, 7 times throughout the press conference, where he had pointed to the resilience of the economic data, right? The resilience of the economy, the resilience of the labor market, suggesting that it's slowing, but it's just there are kind of increased concerns around inflation, and as we've moved closer in their mind to a neutral rate, right? You need to move more cautiously. He did interestingly shift kind of the analogy from taking a boat into port where you would slow down to driving in the fog, right? So I think that where you would slow down in the fog, and I think that analogy was trying to highlight the uncertainty, because when you're in the fog, you can't necessarily see everything that's around you. So I think they were really trying to highlight that uncertainty, and that's why they shifted policy. Why they shifted their
Now, it's interesting we cover, of course, stock prices, but volume plays a factor in this as well, especially when it comes to conviction and overall market participation. What are the trends that you've been following in volume trading activity of late?
Yeah, so Friday was actually the last very big liquidity event of 2024. It was triple witch expiration and the S&P quarterly index rebalances, and we actually had pretty massive volumes. It was the 4th largest trading volume day in history on Friday, the 2nd largest closing auction on the NYSE. So those were 4 billion shares and 2.8 billion shares respectively. And then it was actually a record day in terms of notional volume that traded for both the entire session and the closing auction. So very big, exciting close here.
The Santa Claus Rally, is that going to be a play this year?
Yeah, so that's the big question. So for our viewers that aren't familiar with what the Santa Claus Rally is, that's the final 5 trading days of the year and the first full 2 trading days of the next year. And essentially, this goes back to kind of the Stock Traders Almanac and Yale Hirsch. This is kind of an indicator that he looked at. And what that indicator does is it tells you, he has pointed out that in years where that time period is positive, which is 75 to 80% of the time, that markets tend to trade well in that following year. It's those years where we don't get that Santa Claus rally, that there have been historically some bear markets or kind of more flattish markets.
Michael, thanks so much for joining us at the Open here. We'll check back in with Michael, of course, in studio after the market officially opens. That's Michael Rankin, Senior Market Strategist at the Exchange.
Thanks. See you in a bit.
All right, well, coming up, President Biden delivered an early Christmas present to some of those paying off student loans. We'll have those details up next.
So, Rob, you are the 11th CEO in Hekla's 133-year history, and you're actually 2 weeks in. You are ringing the closing bell today. Tell me, what appealed to you to take over the CEO position?
Well, firstly, this is a real honor, and what I found truly appealing was Hekla's legacy of being a leader in the silver mining space, a really incredible portfolio of assets, and a deep-rooted culture of innovation. So, for example, the underhand closed bench mining method, which was developed at Lucky Friday, that's really testament to that spirit of innovation, let's say. That not only improved safety, which is a core value at our company, but it really significantly boosted production. The other thing I would say is that the commitment to continuous improvement, that extends from everything from community to ESG in general to environmental stewardship, and they're things that I deeply care about. Above all, it's really the talented and the dedicated people at Heckler that really is driving forward the company's success.
Now, what strategic direction would Heckler take under your leadership, and what will be some of your key priorities for Heckler?
As the largest silver producer in Canada and the United States, Heckler really boasts a very high-grade silver portfolio with long reserve mine lives, underpinned by our flagship mines at Lucky Friday and Greens Creek. And so our strategic direction is really going to focus on maximising the value of our really extensive portfolio, and that includes finding a measured pathway to optimising production and profitability at our Keno Hill mine in the Yukon. So there we need to make some investments in some critical infrastructure, foster strong relationships with the First Nations of Nacho Nyack Dun, and really set Keno Hill up for a platform to be a very successful operation and turning it around like we did at Lucky Friday in the recent past.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. One of President Biden's campaign promises in 2020 was eliminating student loan debt. Well, this past Friday, he did just that for some Americans. The Biden administration announced that it would forgive nearly $4.3 billion in debt for nearly 55,000 Americans who work in public service. Comes after significant fixes that the Board of Education made to the public student loan forgiveness program. Well, joining me now with more is Ted Rossman. He's a senior industry analyst at Bankrate. Ted, it's great to see you ahead of the holidays. We have a lot to cover, including the latest on credit cards. But for these 55,000 Americans who will be impacted by this news, what does it mean for them?
It's a wonderful Christmas present for them. You know, basically, as we know, court struck down President Biden's plan for universal student loan forgiveness. So what the administration has instead shifted towards is more targeted relief, and specifically that public service loan forgiveness program. The rejection rate for that program was 99%, which is pretty staggering. There were a lot of technicalities and loopholes, and people thought that they were spending 10 years paying down their student loans, working in jobs like government jobs, police officers, teachers, nurses, public service kind of jobs, and expecting to get student loan relief, and then for the vast majority it wasn't happening. So that's really what the administration has shifted towards after universal forgiveness was struck down. They have now delivered student loan relief to about 1 million people in that once troubled student loan forgiveness program for public service workers.
Well, speaking of debt, Ted, I do want to reference a recent Bankrate study, in fact, of course, that your organization has put out specifically about credit cards. What can you tell us about credit card rewards and how people can use them to their advantage?
About 1 in 4 rewards credit card holders haven't redeemed any rewards over the past year, which pains me to admit because that's a lot of people missing out on a lot of real value. And this is a really good time to take stock of what you have. Credit card points, airline miles, hotel points, they have real value. Unused gift cards too. We did a study about that. About half of us have them. The average is $244. For credit card rewards, it could be substantially higher than that. Sometimes these are out of sight, out of mind, but just like our stocks and bonds and cash, I mean, these are currencies. These have real value. You ought to take stock of what you have and make a plan to use it in the new year.
And in terms of the best ways to maximize those rewards, Ted, what would you tell our viewers?
Travel is often the most lucrative, but it's also more complicated. So cash back is actually Americans' favorite credit card reward because it's very simple, it's straightforward. You could get something like a no annual fee 2% cash back card, maybe the Wells Fargo Active Cash or the Citi Double Cash. Just get 2% back on everything. That adds up over the course of the year. Now that's a baseline. You can do better in certain categories. I would urge people to lean into categories in which they spend a lot of money. I have a credit card that gives 6% back on groceries. That's the Blue Cash Preferred from American Express. You know, it may give 1% on many purchases, but 6% back on groceries is huge for a family of four like mine. Now, I did say travel is more lucrative and it's more complicated. You have to know yourself. Are you willing to put in the work to find the best deals? Do you have the flexibility to travel on the optimal dates? If you know what you're doing and you put in a little work, travel can be more lucrative, but cash back is more appealing to the masses, I would say.
Ted, I do want to get your take on credit card rates going forward, because we had heard from the Fed chair in its final decision of the year last week, noting that it does see sticky inflation ahead, and because of that, rates might stay close to where they are now. What does that mean for credit card rates?
Credit card rates are going to stay high. The average right now is 20.3%. That's only fallen slightly from a record that we saw over the summer, which was about 20.8%. It's going to be slow going if you're waiting for Fed rate cuts to affect your credit card balance. Because let's be honest, I mean, even if the Fed cut a few points from here, which could take years, you're still talking high teens. I mean, there's not going to be substantial relief for credit cards unless there's some sort of legislative action. That's a real wild card. President-elect Trump did propose a 10% credit card rate cap on the campaign trail. I don't see that happening. That's actually 5 points to the left of where Bernie Sanders proposed. When push comes to shove, I don't think Congress or the government are going to act on that. So I really think it's on the individual. Fed rate cuts are going to be slow to trickle in. I would say get a 0% balance transfer card, move your high-cost debt over to a card like the Wells Fargo Reflect or the Citi Simplicity that won't charge interest for up to 21 months, or maybe work with a reputable credit counselor like Money Management International that could bring your rate down to 7 or 8% over 4 or 5 years. The average American has about $6,400 in credit card debt, according to TransUnion. This is your highest cost debt for most households by a wide margin. So it's a popular New Year's resolution to pay it down.
How do you see that changing over time, Ted? And historically speaking, how does current levels of credit card debt compare to what we've seen in the past?
These are record levels for credit card debt, and the figure is actually up about 50% from the beginning of 2021, which sounds alarming. I would point out that some of this is kind of a proxy for economic growth because we're talking balances. Half of cardholders pay them in full every month, so they don't owe interest, and life is great for them. So to some extent, it shows economic growth, population growth, more card usage, and less cash. But for that half that is paying a hefty interest rate, that's where it's really significant. Now, even there are mixed signals. I mean, the delinquency rate's at its highest point since 2011, which sounds bad. On the other hand, the debt-to-income ratio is pretty low on a historical basis. Most people are doing okay, but all news is local. And it reminds me of that saying about credit cards are like power tools. Really useful or dangerous, depending on how you use them. The gap is growing between someone who's using cards for rewards and convenience versus someone who's using it just to get by. And it is really holding back their overall financial well-being.
Ted Rossman, Senior Industry Analyst at Bankrate. Ted, thank you so much for joining us, especially ahead of the holidays.
Of course. Thank you. Happy holidays.
Happy holidays. All right, well, stay with us because up next, TikTok looks to avoid a ban in the United States, and we'll find out how likely this effort is to be successful up next. Viewers, a little brief overview of Arcus.
Arcus is a networking company. Essentially, we are kind of deep down in the plumbing that enables a lot of the packet flows that happen between computers that are in data centers and in between data centers and edges. And a lot of people have heard about companies like Cisco and Juniper and Arista, as well as Ericsson and Nokia in other parts of the world. So we are essentially a new age, next generation networking that does things similar to what Cisco's and the Aristas of the world do.
What sets you apart, though, from your competitors?
We are a programmable, software-driven networking fabric for routing and switching. So typically our competitors sell boxes, and so the box could be a router or a switch that goes inside a data center on top of a rack or in between data centers. We have come up with a network operating system that is universally applicable on top of different form factors of hardware, different vendors. Like we sit on top of Broadcom's hardware, we sit on top of NVIDIA's hardware, we sit on top of Intel's hardware, and then we can become a common network framework and fabric for everything from the edge to the aggregation points to the core of data centers, which becomes super pertinent for then the AI wave.
And what would you say your experience has been being a part of the NYSE Wired community and how it's helped leverage your exposure on a global scale?
Oh, it's been tremendous. First of all, I think it's a privilege being a part of this network. Just the interactions and engagement and the introductions. We had a great happy hour here at the NYSE, and it was fabulous to meet a whole bunch of new customers, prospects, investors. And with a company that's growing as fast as we are, and with the importance that we play in our customer networks, it's a great catalyst and essentially.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, last week, the Supreme Court announced it would be taking up TikTok's appeal as the social media platform looks to avoid a ban. Joining me now with more is Anthony Rappa, partner and co-chair for the International Trade Practice Group at Blank Rome. Anthony, thank you so much for joining. And what does this mean that the Supreme Court has agreed to hear the TikTok case in January?
Well, good morning, and thank you for having me on. So basically, the Supreme Court taking up this case really opens up some very interesting possibilities regarding the future of TikTok, which frankly may not have very long to last, depending on how things go. So as a very brief recap, in April, the president signed a law that essentially gave the president the authority to target foreign adversary-controlled applications. But the law went one step further. It called out TikTok by name as a foreign adversary-controlled application, and it gave TikTok 270 days to undergo a qualified divestiture to a company other than ByteDance or to investors other than Chinese-controlled investors. As it happens, 270 days lands on January 19th, the last day of the president's term. And this was challenged in the DC Court of Appeals and failed. But just last week, the Supreme Court stated that it would take the case. So, briefing is scheduled for that on January 10th.
Yes.
TikTok has asked the court to issue an injunction that would prolong that ban from going into effect, but it remains to be seen if the court will do that.
Interesting. So, Anthony, in terms of how this could play out, what are the chances you think that TikTok can successfully be divested and no ban is in place?
Well, there are some very significant challenges associated with that. Number one, and I think in many cases, a lot of people, especially in the law, should try to stay out of the prediction business. But it's going to be difficult to win this case at the Supreme Court, it seems, although the case does raise very important questions. But they're going to have an uphill battle at the court, first of all. And it really seems as if ByteDance is dead set against there being any kind of a divestiture. Now, number one, they've placed an astronomical valuation on the company. The last I saw, around $300 billion. The secret sauce that goes into that valuation is the algorithm, which is considered by the Chinese government to be a crown jewel. And even under Chinese law, it might require a Chinese governmental approval to allow that to happen, which for different reasons could be considered to be unlikely. So there are different scenarios, especially with an incoming administration that could have a different view as compared to this administration, but certainly a lot of challenges in front of the company as of this time.
What are the key issues or challenges here, Anthony, that you referenced earlier in this case?
So the main issue before the court is that this is a First Amendment issue. And in fact, there were various other issues raised in the lower court. The Supreme Court is only taking this case on First Amendment grounds. That's the only thing that the parties are being asked to brief. But there are a lot of moving parts here. So The ban is scheduled to come into effect on January 19th. The court is taking oral argument on January 10th. TikTok has asked that ban to basically be stayed while the court is evaluating the case. Nobody knows if they're going to do that. Recently, a couple of senators asked President Biden to issue an extension on this ban, but then there have been other senators, also on a bipartisan basis, that have asked the president to let the ban go into effect. And then President-elect Trump has had different things to say on TikTok. His ability to impact events and to prolong the ban is really not at all clear. He could, not to speculate too much, but he could choose not to enforce the ban, or he could choose not to hold companies accountable if they issue services to update or to maintain TikTok or provide hosting services for TikTok. But it's not clear that the app stores are going to want to go along with that, or that they're going to take comfort in being told that the law would not be enforced against them. So there are different things the president-elect could try. Not clear if the Supreme Court is going to stay the effective date of the ban. We may not know until June, depending on how this all unfolds.
Anthony Rappa, thank you so much for joining. I think a lot of our viewers wondering what is in store for the future of TikTok. Anthony's a partner and co-chair for the International Trade Practice Group at Blank Rome.
Thank you.
All right, well, stay with us because up next we will have the opening bell live here on NYSE TV.
Right now, you're starting to see some trades develop. You can argue it a couple of different ways. Stanley Druckenmiller just this week argued that markets pricing in a Trump victory. If you look at things like small caps and cyclicals and Bitcoin, areas that might get deregulated more, might force more M&A, that's very much a Trumpian trade. And Druckenmiller's point was that if you look inside the market of the internals, you're seeing that. Others would argue, well, if you're counting on a Trump presidency to withdraw from, say, Ukraine, then why is Raytheon at all-time highs? Why is Lockheed at all-time highs? Why aren't a lot of exporters pulling back in their stock price if, in fact, we're going to be putting universal tariffs with the risk of retaliatory tariffs from other countries? So you can kind of slice and dice it any way you want. The Times did a piece a couple of days ago looking at how Harris's economic policy has evolved. And part of their argument was that she's been listening to some Wall Street business types and even some West Coast business leaders, Mark Cuban, Aaron Levy, Reid Hoffman, Reed Hastings, who have all come to her support and maybe are whispering in her ear, hey, we would love it if you'd just take an easier stance on antitrust or crypto or all things like that it would very much be in a business-friendly manner. So, is she listening to that? There's a difference between what you say to a voter and what you say to a donor. And some of the conversations we've heard about among the donors is that she is saying, I hear you. At the beginning of the year, we were counting on 6 Fed cuts this year. We didn't get that. Markets at record highs. So, in fact, the whole hiking cycle, the bull market has just gotten stronger and stronger. So we had this discussion a lot on air. Oh, the market's going to be so disappointed if we don't get the Fed cuts. No, the market.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, in just a moment, Americares is going to ring the opening bell and kick off this week's trade. The nonprofit organization is here to celebrate the season of giving and highlight the importance of increasing access to healthcare around the world. The company says its mission as a disaster relief organization is to provide people impacted by storms and man-made disasters access to healthcare and other resources. Currently, the organization is focusing on health and development that responds to individuals impacted by poverty, disaster, or crisis. Jenny Goldstein, Americare's Senior Vice President and Chief Development Officer, is going to ring the opening bell. You see her on the podium now. And later in today's show, she's going to join me to discuss why 2024 was a milestone year for the organization and what's ahead. All right, we are officially open for trade on this Monday, the day before the so-called Santa Claus Rally is set to take place. Of course, that's a historical trend that we were talking about with Michael Ranking earlier. Michael now rejoins me in studio. He's a senior market strategist here at the Stock Exchange. And Michael, as we see stocks open today, just kind of a muted reaction after what was a very busy week, both from a volume and volatility standpoint last week. What's in store?
Yeah, so, we got the stopgap funding bill over the weekend. There was a little bit of a sigh of relief. We saw futures kind of trade to the upside overnight. However, once again, the Treasury yields are back in focus, right? We're seeing yields moving a little bit higher again this morning. So we've seen kind of futures come off of those overnight highs. The S&Ps down slightly. We're about 0.5% off the overnight high. Down slightly. We're sitting right at a pretty key technical level for the S&P 500. It's 50-day moving average. We closed just above that on Friday. That's something traders will watch just in terms of kind of the medium-term trend.
Interesting. So that would be a positive trend, I take it.
Holding above it will be if we actually break back below, because last week we did break below that trend line. And we recovered it with Friday's rally, but we closed right around, right on top of it. So if we start to break to the, kind of the downside here again, that could make traders a little bit more on edge.
Yeah, it's interesting, Michael, because this is a common time, right? That people look at their portfolios, look to maybe rebalance, change allocations. Some of that's been happening for a week or two, of course, into year end, but also wondering whether or not to put new money to work, of course, in the new year. What do you expect is going into those decisions, and what would someone decide in this market?
Yeah, I mean, if you look at December, it's actually been a really tough month, right? And I think, a lot of the consensus view is that we were coming out of the election, that we were really starting to see that expansion of breadth. Unfortunately, with what we've seen in December, that's completely unwound. So if you look at the mid cap or the small cap indices, they're down about 8% in the month of December. So an under the surface, really weak market, because the mega cap tech stocks have held up that S&P 500, up until the end of last week. It had really sort of masked all that weakness beneath the surface. As we look forward to next week, we were kind of talking off camera a little bit, right? We're starting to you're starting to get all the Wall Street strategists putting out their targets. Everybody's kind of middle of the road. High single-digit returns. And that comes after kind of two really strong back-to-back years of 20%.
Right. So in terms of the expectations and how that factors into actual market performance, guests have said the expectations for next year are really high, right? In terms of what has transpired over the past 6 weeks, that might give some people pause just to kind of rein in those expectations. No?
Yes, and I think that's a fair assessment. I think what we've seen in December has done some of that for us, right? It's a question of whether or not that those mega cap tech stocks are going to continue to lead as we head into next year. But we've seen a reset of those kind of post-election expectations. It's really interesting. This is this second. 2024 is the second consecutive year where we've seen 20% gains in the S&P 500. The last time we saw that was in the mid 1990s, right? And there's a common thread, kind of that technological revolution, which at that time was the internet and wireless. Now we're talking about the AI revolution. In that time period, there were multiple. The next couple of years were also double-digit gains, right? So it's interesting. Just because we had big gains in the last two doesn't mean it can't continue.
So in terms of the storylines that you're watching heading into 2025, inflation, I'm sure, is one of them. Obviously, rates, the Trump administration. What else is bubbling underneath the surface that our viewers should know about?
Yeah, I think we have to really kind of pay attention to the economic backdrop and how those policies are going to impact that. We've seen the labor market, which I believe is the key to all of kind of the economic activity here in the U.S. We've seen the labor market hold up throughout this year. It is moderating. If that starts to accelerate, that could create a little bit more of a concern, because if you think about kind of what drives the U.S. economy, that is consumer spending. As long as people have jobs, they've showed that they're willing to spend, right? We're seeing pretty decent numbers coming out of the holiday season yet again. If that labor market starts to crack, that
Yeah.
could create some more concern.
I'm glad you brought up the holiday season because by now I'm sure hopefully most people have finished all of their holiday shopping,
I've
right?
still got a little bit to do myself.
Okay, of course. In person, I think Michael will be your resort at this time and place, but we've already seen record numbers, right, as you mentioned, and so the consumer does seem to be holding up quite well.
Yes, yeah, we've seen particularly online numbers have been really, really strong.
Yeah.
What we are seeing is that, and companies have highlighted the fact that we're seeing a consumer that is really kind of focused on value, shopping for deals, right? So, we are starting to see some more differentiation, in terms of kind of where they're looking to kind of spend that wallet. But we have gotten some positive commentary about those discretionary spending areas, kind of from some of the major retailers suggesting that we're starting to see a turn. I think one thing you have to wonder about is with the expectation that we are going to see some tariffs
Yes.
in the new year, how much of what we're seeing is a pull forward of demand where consumers are expecting higher prices next year. I think that was a big driver of the retail sales numbers, especially if you look at the auto numbers from last month, which were very, very, very strong. I think that is something that we're starting to see play out here.
Smart shoppers. They've seen this story. Michael Ranking, Senior Market Strategist for the New York Stock Exchange. Michael, thank you as always.
Right, thanks for having me.
Happy holidays.
Happy holidays.
All right, well, stay with us because up next, one organization says tourism here in Manhattan approached record highs this year. Our next guest will tell us what impact it's having on the city heading into the new year.
A pleasure. So I want to start off by talking about the company. Tell me about FISNA.
FISNA is short for physical DNA, and what we do is we analyze the physical world and turn it into code. And what that really means is that we open up the floodgates of all the potential of AI to what's physical, and we're able to do things that weren't possible in 3D before, right? We can take 3D designs and use them to automate things like have autofill for 3D. We can improve supply chain decisions so that you're able to find the same part from a different vendor because it has a different part number, and save a lot of money that way, and make a lot of other intelligent decisions for your company or your Department of Defense in some cases, another group we work with, for things like inventory management, part acquisition, part maintenance, et cetera. And so we work in a various number of industries, but it's been great. Over the past year, our revenue has grown about 10x year over year, and a lot more to come this coming year. And it's been great we've got great supporters. We have Sequoia Capital behind us, Drive Capital, Google Ventures, and several others that have been fantastic to work with.
So now, when it comes to search, what do you have here that others can't do?
So the secret sauce that we have is this patent around 3D intelligence. And that really allows us to normalize that 3D data and essentially allow computers to do everything with the physical world that they were previously able to do or currently able to do with things like text, right? So being able to identify, in some cases, manipulations that have happened to 3D models that might have happened as a result of like a cyber attack, or things like, as I mentioned, autofill or procurement decisions, is this the same part? Is there a deviation in the part? Can we use this as a suitable alternative? And getting really deep intelligence out of models that weren't possible before. It's kind of akin to if you were, let's say you were a healthcare company and you were trying to use AI to evaluate humans and how you can help them. Well, right now in the 3D world, think of it like analyzing pictures.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. The holiday season is always busy here in New York City, and one organization has attached a number to this year's action. According to NYC Tourism, more than 64 million people will have visited the Big Apple by the end of the year. That's close to the record-setting 2019 visitation level of 67 million people. Well, joining me now with more is Julie Coker. She's CEO and President of NYC Tourism. Julie, welcome and happy holidays.
Happy holidays. So excited to be here.
We're so happy to have you. And I gotta say, New York City looks absolutely beautiful this time of year. What is it doing for tourism?
Oh, New York City will always be an aspirational city for those that are here in the U.S. as well as international. But really, we're proud of the results of 2024. As you indicated, close to 64 million visitors came to New York City. 13 million were international, close to 51 million were domestic. Those visitors spent about $60 billion here in the city with a great impact. So we're really excited about what we're seeing.
And how does that economic impact compare to what we've seen in the past?
Sure, we're really getting close to pre-pandemic levels. And we do feel in 2025, we will exceed those. So next year we are forecasting 67 million, so a slight growth, but we will be back to pre-pandemic levels.
And when people come to New York City, what are their favorite things to do that you found?
Oh, of course, there's lots of people watching in this time of year, all of the beautiful holiday decorations. It's just really magical. But what we're most proud of is that as we move out of the holiday season and into 2025, visitors were really focused in on them being able to maximize their budget. So they're going to see the return of Restaurant Week, the return of Broadway Week, Hotel Week, and certainly must-see things in 2025 because we understand that they want to maximize those budgets.
So for anyone who is looking to plan out their vacation calendar in 2025, what are maybe some of the key times of year that you think would be good for them to look at?
Sure. The good thing is that a number of our holiday decorations will maintain through January. So certainly first quarter is always a great time. Might even sprinkle in a little snow that just makes it even more beautiful. But then also too in 2025, we'll see FIFA's World Cup, or the Club Cup that will be here. And that's really a precursor to the World Cup, which will happen in 2026.
So there's a lot of action in store.
Absolutely. Lots of new attractions. And of course, Broadway is always Broadway. And again, we'll have Restaurant Week and Broadway Week. And obviously, there'll be something for everyone to do in all 5 of our boroughs.
What have you seen in terms of overall prices of activities? I'm glad that you referenced ways that people can save, tourists can save when they come to the city. How are the prices impacting the overall economic spend?
Sure. New York is an expensive city, but what we've done is we've created value. And so when you have things like Restaurant Week and Broadway Week and Hotel Week, that allows those that are looking to maximize that budget, those are the times for them to come. But definitely first quarter, and of course we know the summer is always a great time to be in New York.
The summer is a great time as well. Your favorite things to do this holiday season in the city?
I am a big fan of the tree at Rockefeller Center. I get to walk by it every day and I absolutely love it. And then of course all the beautiful holiday decorations up and down Fifth Avenue. And then I'm still a big fan of just catching my breath and walking through Central Park.
Yeah, Central Park looks great. We've got the tree outside here at the Stock Exchange as well. It looks amazing and a great time, of course, to host tourists this holiday season. Julie Coker, CEO and President of NYSE Tourism, joining me here in studio. Julie, thank you so much.
Thank you. Happy holidays.
Happy holidays. All right, well, elsewhere, the media industry is making headlines on a number of different fronts, ranging from coverage, of course, leading up to the election and to the NFL doubleheader as we talk about the holidays that's set to debut on Netflix this Wednesday, Christmas Day. The media is also colliding with one of the most buzzworthy sectors on the street, that's tech and artificial intelligence. Well, joining me now to talk more about the media landscape is Rashad Tabakawala. He's the author and former chief strategist and growth officer at Publicis Group. Rashad, it's great to have you on the show today. I see your book behind you that's going to be hitting shelves soon. What can you tell us about it?
Well, my new book, Rethinking Work, comes out February 4th in the United States. And it basically talks about how in between now and 2029, work will change more than it has in the previous 50 years or up to 2020. And basically, every company has to reimagine itself, its strategy, and every person who works is going to be very different.
What does that mean for the media industry in particular, Rashad?
There are a lot of different things in the media industry. I think what we're beginning to see is in the media industry, we're tending towards a company of one. What I mean by that is today, the creator economy of creators who create sort of media is $250 billion, according to Goldman Sachs. The total size of the journalism industry is 27 billion. So when people who believe mainstream media is niche media and niche media is mainstream media, it's the other way around, which is mainstream is niche and niche is mainstream. But the other is there are about 2 million people who earn over $100,000 creating online or in podcasts, etc. And they are about $100,000. There are less than 80,000 journalists who earn more than $100,000. So what we're basically seeing is this world of technology is enabling everyone, not necessarily to just become media, but become their own media company.
And what does artificial intelligence mean for members who are working in the media? How should they think about working with it instead of perhaps against it?
I think the best way to describe AI is AI should be called augmented intelligence versus artificial intelligence. It basically is going to be like electricity. Just like electricity has not replaced us, it's just enabled us to do more. We're going to be in this world of AI plus HI, where the augmented intelligence will enable human insight, human intuition, human interaction, human imagination, which a lot of the media world is fantastic at.
I want to get your take on TikTok because we did recently hear late last week that the Supreme Court is set to hear a TikTok case trying to prevent its ban in the U.S. on January 10th. What is TikTok's role in the current media landscape?
TikTok is extremely significant in the current media landscape. And in fact, there is a huge concern that without TikTok, two things will happen. A lot of people will find their ways of making money sort of disappearing. But the other is obviously people are already beginning to migrate to things like Instagram and YouTube, which you're beginning to see is one of the reasons why Meta and Google stock price, in addition to a lot of other things like AI, is going up. But as importantly, one of the things that TikTok has done is it has changed the entire media environment to be one of basically algorithmic scrolling and video driven. So increasingly, people are reading less and seeing videos more.
Is that a good or a bad thing?
Well, as someone who's a writer who writes it, I would sometimes think it's not a very good thing. But on the other hand, as long as you get communication, it's fine. And to give you an idea, I actually made a video trailer for my book to put on Amazon, to give you an idea of how I have to align with the trends.
Yes. There is something for everyone. And of course, I do know a lot of people who are on TikTok and others who have not yet adopted that platform. So it'll be interesting to see how that shakes out, specifically with the new president set to take office on January 20th. When it comes to deal making, dollars on these platforms, Rashad, which ones are the most lucrative and how can people in the media take advantage of that?
Well, there are what I basically call the whales, and then there are the planktons. So the whales are basically the large 6 or 7 companies like an Amazon, like a Google, like a Meta, like a TikTok. And these are basically platforms that enable the plankton, which is people like myself and other creators, where we basically use their technologies and their distribution process to help us both create and to distribute. The immediate reality of it is eventually the best people have authentic voices and actually have something fresh to say. And so to a great extent, what I would basically say to anybody who is a journalist or a creator, practice your art and craft and then let these companies take care of the technology.
One thing that I want to get your take on, Rashad, is cryptocurrency. I think social media in large part fueled a lot of the interest that we've seen in cryptocurrency, very much back in focus and of course talked a lot about on social media. If you look at that as a case study, what does that tell you more on the topic of authenticity and using these social platforms to make change?
Well, there are a few things. The first one really is authenticity is the key thing here. I just read a recent report by the Schonston Center at Harvard, which basically says that people trust creators sometimes more than they trust journalists, primarily because the creators have to constantly claim and show that they are actually true. So to a great extent, when it comes down to cryptocurrencies, there's obviously a part of cryptocurrencies that is highly speculative, but things like, Bitcoin and blockchain, etc., have an underlying use case, whether it's a value creation or a liberal creation. So to a great extent, if you think about anything, whether it's storytelling or money, everything is built on other people accepting the story or accepting the money. And to an extent, as things like crypto have become more mainstream, in itself, it has created a virtuous loop upwards. Now, again, I'm not necessarily encouraging people to invest in cryptocurrencies, but I do believe blockchain is for real, and certain things like Bitcoin might also be real.
Rashad, great to get your take, especially as we prepare to enter 2025. That's Rashad Tabakawala, author and former chief strategist and growth officer at Publicis Group.
Thank you.
All right, everyone. Well, stay with us because up next, we'll speak with today's bell ringer about America's biggest goals for the new year.
So Wipro is one of the leading global technology services companies. We are over 230,000 people, headquartered in India.
Oh, wow.
And our focus is on AI and leading with our AI strategy. So bringing AI into everything we do, our tools, our solutions, and our platforms to help our clients drive value.
What is the problem that you're trying to solve, though?
So all of our clients are looking for new sources of revenue, driving improved client experience, and delivering more profitability. So AI has the opportunity to truly revolutionize every industry, banking and financial services alike. And the opportunity with AI we're already seeing in terms of clients leveraging it to improve their experience, whether it's their financial advisors or their retail banking clients, to really make sure that they're giving that high-touch, trusted experience.
Are there any specific sectors that you're focused on from a business standpoint?
Yes, our wealth management for AI. We did a survey of 100 C-level execs in wealth management, and we found over 44% of them are already extensively using AI in their wealth management business, and 72% of them are already seeing it improve their competitive advantage, meaning the insights they have are making them work better with their clients. So what we're doing with wealth management, we're partnering with Microsoft as well, is to deliver a high-touch experience. So think about ultra-high net worth clients who have $100 million. They have financial advisors who take very good care of them. How do you bring that down to the clients that are 1 to 10 million, the mass affluent who are even below 1 million? How do you create that high-touch experience? And that's what we help our clients do with the platforms and solutions that we bring to them, and leading with AI.
And how are you implementing your AI strategy, right, when it comes to investments?
Yeah, so last year we announced $1 billion investment in AI. And since then, we started with making sure we trained all of our employees on response.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Let's take a check of the markets as we begin this holiday shortened trading week. We are just about 23 minutes into the start of trade, and you do see fractional losses there on the Dow. Bit of a mixed market today, of course, comes ahead of what is supposed to be the Santa Claus Rally tomorrow. It starts tomorrow, and of course, over history, over the past decades, we see that the stock market does usually rise on average in the final 5 trading days of the year through the first 2 days of the new year, for an average gain of about 1.3% going back to 1969, according to the Stock Traders Almanac. The market, of course, will be closed on Wednesday for the holiday. Well, speaking of the holidays and giving, earlier this hour, global nonprofit AmeriCares rang the opening bell to kick off today's session. And joining me now is the bell ringer herself, Jenny Goldstein, Senior Vice President and Chief Development Officer for AmeriCares. Jenny, it's great to have you on the show.
Great to be here. Thank you so much for including us.
What is this holiday season all about for your organization?
Well, this is a really important time for AmeriCares and so many other nonprofits. The year is definitely not over, and so many people, during the spirit of giving, are obviously giving presents to each other and also giving back as part of the holiday season. And we see that at AmeriCares. A lot of people are making very generous donation in the final days of the year.
How is AmeriCares using those dollars for good?
Yeah, great question. Well, AmeriCares is funded by amazing and incredible generosity of so many donors and corporations, and all of that money goes to fuel health programs. So we make sure we save lives and improve health for so many people around the world.
And what are the most important elements you think, especially around the holidays, that our viewers should know about when it comes to what AmeriCares is focused on in terms of improvement?
Yeah, so AmeriCares, our mission is to save lives and improve health. Since our founding 45 years ago, we've worked in 164 countries, and we do all kinds of things, but all centered around the idea that health is a human right, and everybody deserves access to health and health services.
Talk to me more about what your organization has been able to achieve in 2024 as we look to round out the year on that front.
Yeah. Well, this year has seen no shortage of global humanitarian disasters and, of course, extreme weather events. So just most recently in hurricanes Helene and Milton that affected the Southeast, we responded. We're still responding. We will be responding well into 2025. We're also still working on the front lines in Ukraine, Gaza, and we're working with over 4,000 health centers all around the world to make sure that people have access to health services and mental health trainings.
What can you tell us about what's in store for 2025?
Well, in 2025, we're going to make sure that health centers are still ready to prepare for whatever comes their way. We're also going to be expanding our mental health programming. I think we've all seen since COVID and in increasing years that mental health is so important and fusing it with all of the health work that we do. And we're seeing that on the front lines in the Southeast right now, specifically in the Carolinas and other states that have been impacted by Helene. So we're doing more mental health trainings that we're excited about in 2025 to make sure that health centers and the people they serve are prepared for whatever comes their way next year.
Are there ways that you're able to track that progress?
Yeah, we track it through a lot of different ways. So we work with all these frontline health centers, nurses, and other people, and we make sure that people are getting access to health. We look at a lot of different indicators to make sure that we're providing programs, interventions, medicines, and supplies to make sure that people are able to make good choices and have healthy behavior changes, mentally, physically, as well.
Any other tips for our viewers this holiday season, what they need to know when it comes to giving?
Just whatever you can give, please give. You can go to americares.org to make a donation. There's so many incredible organizations that rely on the donations of so many people as they're thinking about their year-end gifts. So thank you for thinking about philanthropy in this huge week to help really set AmeriCares and so many other organizations up for success in 2025 and beyond.
Jenny, such a pleasure to have you. Congratulations on everything, and we're so happy to welcome you to the Stock Exchange, of course, this holiday season with AmeriCares.
It's great to be back, and thank you so much. Wishing everybody a wonderful, happy, and healthy holiday season.
Absolutely. That's Jenny Goldstein, Senior Vice President and Chief Development Officer for AmeriCares. All right, well, we are looking to round out this hour as stocks are just a little bit mixed to kick off what will be a holiday-shortened trading week. Of course, we see the S&P 500 up double digits, more than 20% this year on the back of economic growth and continued earnings improvement. We'll see if that so-called Santa Claus Rally starts tomorrow, as it typically does, with data going back to 1969, as I mentioned earlier. Traders still very active down here on the floor of the New York Stock Exchange ahead of the holidays. It's going to do it for today's coverage on NYSE TV Live. Thank you for watching as always. I'm Kristen Scholler, and we'll see you back here tomorrow morning.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.